So this month I earned €120.54 in dividends from 10 different companies. And actually this is a decrease of 33% year on year. And it's the first time since I've started dividend growth investing back in 2018, December 2017 is when I bought my first company, that I've actually seen a decrease. And those that follow my journey on the podcast or on my blogs will know that last year, and maybe the year before as well, I was pretty much option trading and going in and out trying to trade the market and stuff like that. And there was a strategy called dividend capture, and I was trying all these things out. I found them to be not a waste of time, but it took a lot of effort and a lot of time, and I don't think the gains outweighed the time that I was putting into these. So I've started to peel those back going into 2023. So I might see one or two of these months where the actual dividend income is lower, but this will be actual dividend income that I'm getting from passive income, where I'm not actively trying to do things to manipulate the dividends. The biggest payoff for me this month is AT&T, which you can see paid me €25.21. This is kind of bittersweet because although it is the largest dividend that I received this month, you can see that it is significantly lower than 2021, 2022 and 2020. This is because everybody knows they cut their dividend. At the time, I was grappling on whether I should hold on to these guys or sell them. Usually I sell them after a dividend cut, particularly a company like AT&T, where it is kind of, I don't see where the growth is coming from and they have large amounts of debt. But I think one of my key lessons here is, one, I was chasing yield. Two, the dividend cut I knew was coming. And three, it took me way too long to make up my mind. And I felt by the time it came around and gone, the share price had dropped so much that I was losing too much money by selling them. Couple that with, I still now get a decent yield from them. The yield on cost at the moment is roughly 3.6%. So my short-term plan is to hold on to these guys until I reach my break-even price, and then I'm probably going to sell them. And I'm thinking about transitioning, I don't know whether into Verizon if I want to stay in communications, or there's another company called CCOI, which is Cognet Communications. So I'll make that decision as I get closer. But for now, I'm holding on to AT&T. I'm still collecting a 3.6% dividend yield, and I'm waiting for their share price to get back to at least a break-even point. And I'm also looking at what management are doing. I know they've spun off the Warner Brothers business and they're trying to get back to their core holdings. So look, I'm just going to sit this one out and see if they cut the dividend again. I'm going to have to take my losses, lick my wounds and move on. But at the moment, I'm just going to wait and see how this one plays out. The second company I also had is Verizon, which paid me €2.36. And as you can see, some of these, particularly AT&T, if you look at 2021 and 2022, the dividend, even though they didn't cut the dividend in that year, the price fluctuates, and that's because this is converted to euros, and then you've got currency that comes into effect here. So any figure you see here will be in euros, and it's converted on the date that I received the dividends. So that's automatically built into this tracker. The third company that I've got is British American Tobacco. It's one of my favorite tobacco companies. I own both them and Altria, and I have 100 shares in Altria, and I'm trying to build up British American Tobacco to at least be in a similar position, because I think Altria, ticker symbol MO, is a little bit overweight in my portfolio, and honestly I prefer British American Tobacco. I think their management is much better, and also they have emerging markets. They've got a few more growth drivers than Altria have, but I'm happy with their dividends of €23.46. The fourth company that I have is ABBV, ticker symbol ABBV. And as you can see, they have paid me €13.09. I was moving these guys from from my DeGuiro into Interactive Brokers at the time, and actually what I did is I sold them in DeGuiro, and when I was moving them across, I actually only bought half the amount of shares, which is why I only got half the amount of dividends, and I invested the other half in something else. Realty Income paid me €3.49. This one, I was feeling that they were a little bit overpriced at the time, and I remember selling him. That's a learning for me. I'm trying not to make that mistake anymore, because I think since I've done that, actually their share price has gone up about 15%. So I think that's one of my key learnings, is to stop trying to think I know better than the market, and just to trust in the holdings that I own. The next one I have is Blackstone, which paid me $18.65. This is a position that I'm slowly building out. I think I will get better opportunities in the future to start adding more shares, because there's a lot of negativity in the news. There's recent news that they defaulted, which we talk about in the podcast. They defaulted on one of their bonds recently, and it's not good news. It's not a good look for management either, but I do feel like there's going to be better buying opportunities for Blackstone. I also have Texas Instruments in there, Siemens as well. Siemens is one where I was doing dividend capture. I captured €60 in dividends, but now I actually own them in my portfolio, and they paid me $21.25 in dividends this month. And then the last two that I have are what we call CEFs. And actually, Interactive Brokers have stopped allowing me access to US-based closed-end funds, because they don't offer a key investor document. So I can no longer add to these. I can invest in UK-based investment trusts. I can also invest in BDCs, which I mentioned in my last portfolio review, which I'm adding to. So I do hold a certain portion of my portfolio for high yield income stocks. It's purely an income play. I'm looking for high yield funds, or in this case it might be trusts now from going forward, but I will be looking to sell these at some point. I'm holding on to them for the moment because their share price has taken such a beating, and they still continue to pay high dividends. So I am able, luckily, to collect the dividends on these, and Interactive Brokers are not forcing me to sell them at the moment. But over the next couple of months, when I do get the opportunity, I will be selling these guys out of my portfolio. So every month I try and invest at least €1,200 into the stock market. And actually in February, I managed to invest $1,500 in 11 different companies. This gives me an expected forward dividend of €64.12, which is a rough yield of about 4.27% based on my purchases. I'll give you a rundown of the 11 companies that I bought, and the first one, as you can probably see on the screen in front of you, is a company that my good friend European DJI wrote about, and this is T. Rowe Price, ticker symbol TRO. I won't talk a little bit too much. I will link to this article. It's a pretty good article. I know European DJI bought this company as his first company in 2023, and with good reason. Just to give you some of the quick highlights, you can see their dividend yield is upwards of 4%. They have a 5-year dividend CAGR of over 16%, and their payout ratio is a little bit on the high side, but it is 71%. I do recommend that you read this article, and that was actually my first purchase in February of 2023. The second company that I bought shares in February 2023 is ticker symbol HPQ. HP have been around for quite some time, and actually this company divides a lot of opinion on whether or not it is a good investment or not, and I might do a separate video on these, but I am gathering some shares. So I gather typically maybe 2 to 5 shares every month as I build up a position in these. I do find their price incredibly attractive. They do generate a lot of free cash flow, but there is concerns around their business, where the growth is coming from, and is it actually going to decline. So there is some risk there as well, but I think this deserves a video of itself. But I did add a couple of shares to these. I added 7 in total, which gave me a forward income of around €7.28 at current prices and exchange rate. The next two companies you will be familiar with because I spoke a little bit about them last month. The first one is Vici Properties, ticker symbol VICI, and they own a lot of properties, particularly in Las Vegas, which is something I'm quite happy about. I try to go to Vegas every couple of years, and I hope to get there at the end of next year as well. But I think this is a decent company. They don't have a long track record, as I spoke about last month, in paying dividends, but I think it has potential to continue paying dividends over the next 5 to 10 years, particularly growing dividends. So they've grew them substantially over the last 3 years. We might see that slow down, but I'm still expecting double-digit growth in the short term. The second company that you will be familiar with is NN Group, and again I spoke about these guys last month. I initiated a position in them at the start of the year, and look, they are an international financial services company. They are based in the Netherlands and they have a decent start yield. So again, check out my last video if you want to hear a little bit more about these guys. But I've continued to add another 26 shares in this company, which gives me around €72 in forward income as well. So the next company that I bought is Johnson & Johnson, ticker symbol JNJ, and it's actually been quite a while since I've started buying shares in these. And if you look at their year-to-date share price, you can see that it has dropped from a high of around $180 all the way down to where it sits now at $154. And for those that are not following the company, we often speak about these as a quality company. They're one of only 3 companies that have a AAA rated balance sheet, but they are in the news for some litigation, which they tried to pretty much squash straight away, and it was rejected. So there is that concern about the litigation. And honestly, when I'm thinking about it, I got rid of 3M out of my portfolio because of the litigation. And Johnson & Johnson, I need to understand these numbers. I actually felt and thought from what they were saying that they had dealt with this, that they were able to spin off the company and that it would have no effect. It has since transpired that that is not the case. So I really will have to look at this litigation, see what the impact is, see if they can afford to pay it, what effect it will have on their cash flow and their ability to continue to grow and pay that dividend, because that's what I am, a dividend growth investor. And if I don't see the reason why they can grow that dividend year on year, then I might have to pull back. I've been burnt by litigation in the past, and it is one thing that I really want to try and avoid. So I don't see myself adding any more shares to these this year until I start to understand what that litigation entails, what the potential cost of it will be, and whether or not the company can or cannot afford to pay it. And the last dividend growth company that I bought is WP Carey, ticker symbol WPC. This is their 50th year. They are a net lease REIT, which is a real estate investment trust, and they have an incredible dividend track record. Again, I'm trying to pad out my real estate investment trust exposure, so now I own WPC, Realty Income, and Vici Properties. So these guys, I bought a total of 8 shares, which gives me roughly around €34.24 in forward dividend income. So those of you that have been paying attention, you might have noticed that I mentioned some forward dividend incomes that is a lot higher than the €64 that I said that I added to my projected annual dividend income this year. And that is because I had to sell a couple of companies this month. The first 2 that you can see on your screen is 2 CEFs, and these are 2 of the American ones that I can no longer actually buy. And ASG actually is one that I sold a little while ago, but they were paying out dividends in shares, so I managed to still acquire 3 shares of them, and I've sold them off. So that's they're called Liberty All-Star Growth Fund. Second one, ticker symbol PFD. I also sold them as well. So I got rid of all my, well, not all, but I'm trying to get rid of all my CEFs, my US based ones, over time. The next 3 on the list are VF Corporation, Intel, and Fresenius. And if you look at what the 3 of them have in common, the 3 of them have cut their dividend. And actually, VFC was one I was only buying a small amount of shares. I bought them at around $25, and as you can see, I sold them in around 28, so I actually made a small bit of a profit on them. I was only buying a small bit in the hope that they were keeping that dividend, but it did look incredibly rocky and unsafe. We mentioned that on the podcast numerous times. It did look like it was unsafe. The only thing that there was a little bit of hope there was for their dividend history. There was a chance that they might keep that, but actually it does make sense that they cut the dividend, but I sold them out of my portfolio. Intel as well, I spoke about them, and we actually did a whole episode on Intel as well, about around what we did with our shares when they cut them. Again, it's not expected, so a lot of these guys, you can see that they are at risk at cutting their dividend. A lot of these were just, I would say, an educated bet on that they might keep their dividend based on their histories, based on what they've done before, and based on their chances of turning the company around. But again, I agree with management here that they should cut the dividend. They probably should cut it completely, if I'm honest with you. But it was, as I said, a bet. I bought them in around the 20, I think it was around 22, 23 dollar mark as well. So again, I also made a small profit on these, and I got their dividend in March as well, which is quite nice. And then the last one is Fresenius, and I held a small position in these for the last couple of years. I haven't added to them because management is a little bit all over the place. I was holding them while the dividend was flat. I had no issue with that, but again, they are cutting their dividend. It is an awkward company. It's split into lots of different parts. We do have a podcast on that as well, which one of our guests, Phil, joined us. He is a German national. He knows this company inside out and gives us good insight into the company. But again, they did cut their dividend, so they are out of my portfolio. And then the last company, which is ticker symbol GNK, and this is Genko Shipping. And this wasn't really a dividend play in my portfolio. I did mention at the end, I think it was around September last year, I bought these at around $12, $13. And I did feel like, well, when I say I did feel, I follow some people who know this industry quite well, and they did flag this up quite early as being undervalued. So while they did have a high dividend yield of around 10%, that wasn't the thesis around investing in these. I wanted to buy these guys at around $12 to $13, and I was planning on selling them between $19 and $20. And I had a sell order in at 19, and they sold automatically. So that freed up some funds, and that is why I was able to buy a lot more companies this month than what I normally would. So lastly then, if you look at my projected annual dividend income, it is now up around 11.33%. It is growing slowly month over month as I continue to add to my portfolio each and every month. My portfolio yield currently stands at 4.55%. My largest holding is BASF, that makes up around 12% of my portfolio. My largest sector is consumer staples at around 29%. I don't think this is actually right, because when I look at my sector allocation, I do own some technology stocks, and I certainly own some industrial stocks as well, so I need to check that out. I do, however, own 45 companies in my portfolio, and as you can see, this quarter my average income is at the moment €87.20, but that will be over €100 at the end of March. So there you have it. There's my portfolio update for February 2023. I hope you've had a good month. I know I've had a good month. Please let me know in the comments below how you're doing, what companies you added to, and if you actually sold any companies as well. I'd love to hear all your stories. Until then, see you on the outside.